if you simply just measure the direction it's going and go with it. When it switches from down to up, go long. If it switches from up to down, go short. I don't know how to make it any simpler than that. Every major move, up or down, 100% of the time you'll be in on it, without doubt.
Welcome back, everyone. Today I'm sitting down with Tom Basso. We have a good discussion here with trading, his experience in the market, how it's been started at 12 years old in the market, how it's been kind of evolving since then, managing different funds, now trading his own fund since 2003. So Tom, welcome to the podcast. How's it going today?
I'm doing great.
Awesome. Good to have you here. And I want to kind of start with a quick introduction. So tell people a bit more about who you are and sort of what you do these days.
What I am by degree is a chemical engineer, and left engineering and went into money management and was fascinated with all the numbers that are involved in trading and all the ways you can filter data. And I looked at trading as sort of an instrumentation control loop with noise and information, and you got to separate the noise from the information so that you can use the information to buy or sell. And that led to investment advisory firm. It led to a commodity trading advisory firm that led to currency trading. Ended up managing about 600 million at the peak back in 1999, I believe it was, or 97, something like that. And then 2003, I retired, closed down the firm, been trading my own money ever since, which is a whole lot easier and fun than trying to trade other people's monies. And a whole lot less registrations. I let all my registrations expire. So I'm truly retired. And so these days I work on fun projects. I've got a book that I finished third quarter of 2022, and it's now about to go to printing. And it should be out around mid-March, they're telling me, but I've just got an update that I'm going to have a meeting next week to talk about it some more. So we'll see if the date holds. And then I've been consulting on a simulation and trading platform, using myself as the guinea pig, so to speak. And out of 7 strategies of the 9 that I have, 7 are computerizable, I call it. They can be computerized. Out of the 7, I've got 6 of them running on the new platform as an alpha test. So we're working through everything from connections to the broker to connections to the data, getting my desktop in the cloud in my browser to talk to the broker's platform. We just updated and did a new version in this afternoon, actually. So I ran my stuff this evening on version 10. So that's how many times we've been revising things, trying to make them better, trying to make them faster. And hopefully 2023, sometime in the year, we have it commercialized. And so people can start using the product themselves like I do. So I keep busy remodeling the house we just bought. That's going to be about an 8-month project. So that keeps me busy. And if I get a chance, I like to go golfing every now and again, but it's workouts, golf, it's tough. My day's pretty full lately.
Definitely a lot in there for sure. That's something that I think people who've been trading kind of always stay busy over time, because like trading is something where you get busy very, very quick in the beginning. And the fact that you're still trading a lot, but the fact that you still trade less, then that opens more time for other stuff. I kind of want to go back in time to, you started trading at 12 years old, actually buying mutual funds at 12 years old. How did that go, and how did that kind of start out exactly?
The salesman came in, and my father was a postman, and he was looking for ways of investing his money. And he wasn't much into risk at all. He listened to the salesman's sales pitch, and because I was bringing in $10 a week as a paper boy, and I didn't have anything that I could do with it, I listened to the spiel as well. Turns out I bought the mutual fund. My father didn't. He put it in CDs in a savings and loan, which of course eventually went bankrupt during the late 60s, early 70s, as he held on. As they went into the 80s with Reaganomics and the higher interest rates, the savings and loans went under to the tune of some $400 billion or something. I don't know. It was a huge amount. And I held on to the fund all the way through the ups and downs, ended up through the bear market of 73, 74, came out of college, and I was at break even from where I started. So it taught me a great lesson in costs of a transaction because the commissions were very high. It also taught me about bear markets, and it taught me about market risk, and it taught me a lot about patience. And it formed my early years in 75, 76. We hit a bull market. That was fortunate timing on my part, as I was making good money as a chemical engineer, and put it in the stock market, ended up with a custom home in the woods that I designed, and was able to start a commodity account, got that up to $250,000. And, things went off in different directions. The business started booming. I started making money from the business on top of that. So, it's been a good life. It's been an interesting start as a paper boy and a chemical engineer, and then ending up as, 50,000 followers on Twitter as a trader.
What did it take for you as a chemical engineer to succeed in trading? Because I guess the two fields are very different skills. Was it a bit of luck at first from the market, or was it kind of skills you've built back then? What did it take for you to kind of succeed in trading from that chemical engineer background?
I realized early on in the process that trading and chemical engineering has some similarities, actually. The first course you take as a chemical engineer is something called process engineering. And they give you the simple example of, you've got a tank and you've got a pipe coming in and a pipe going out. And the water is coming into the tank at a certain rate. It's going out at a certain rate. How long will it take for the tank to fill up or to empty, depending on how the flows are? So, simple terms, process engineering is product in, you do something with it, and product out. But isn't trading bringing in data, making decisions with that data, and shipping out orders? Same exact thing. I looked at myself over the years not as a trader like everybody else thinks of me. I think of myself as a businessman who happened to run a business involved in trading. So when I looked at data flows, I tried to make the data flows more efficient. I tried to buy more computers. I tried to buy faster computers. I tried to work with more automated trading desks that could accept automated orders, so I could speed the flow of orders and reduce the error rate inside my company, so that I didn't have to eat, huge trading errors that other firms had to eat when their human beings screwed up. And we got our error rates extremely low. We did a lot of double checking of data coming in, so we'd make our data the best data it could be. And, it allowed to be a good process engineer in trading, so to speak. And that's the kind of the way I approached my whole trading career, and still do today.
That's such a big lesson. The fact that placing trades is just like a very small part of trading. Like, you place trades take a couple of seconds, couple of minutes, but then the rest of the work is done like behind that. When you kind of, like you mentioned, build your system, build your mindset, have technology on the side to kind of support that. I think too many people are making the mistakes of just focusing on the placing trades and picking the right entries, and they forget like the whole thing behind.
Position sizing, management of your cash, figuring out where your margin rates are, your leverage rates, your risk, your volatility, all the different aspects that go into trying to keep your portfolio stable, keep your return to risks high, keep your mental processes, the way they should be, disciplined day after day. It's been an interesting life, because even today I'm in retirement, but I always know when the market's going to open. The stock market opens at 7:30 here this time of year, and I'm always aware of the clock. It's always there. It's just part of my life. Doesn't stress me or anything, but it dictates a lot of like when I go on a vacation, holiday, you end up with my wife, understandably, since she knows it's important that I trade well, she always builds into the vacation schedule a certain half an hour to an hour for me to catch up on important things, get my trading done, and then I'm on vacation again. It just takes me that small amount of time, and then I'm done, and I don't have to look at anything for the rest of the day. And I can operate that way for weeks if I have to. It's not it wouldn't be my decision to try to do that unless it just, we're taking a trip to Australia or something. It's so far away, or Thailand, and so far away, you just want to stay there for a while because the plane flight kills you when you're 70 years old. But I just need that time, and it's once a day, and it's something that just gets built into my schedule, and I've just gotten used to it over the years.
That's very interesting. I gotta hear more about this because I travel a lot myself. I'm always kind of going to different countries, not just like very, very local, very close to Thailand, sometimes more far. And I kind of had to work on my routine a lot to not do all the things I do at home, but like simplify things a little bit. So what are some things you do when you travel and trade? Or is it like simplified? Are there a few key things you feel like you gotta do and other stuff you leave behind? Or what do you kind of focus on?
No, not really. What I try to do is automate the process as much as possible, so that with a laptop in my possession on the road, if I can get an internet connection, and my wife always books us into hotels with good internet connections if she can, and then I dial up the internet, bring in data, or start the processes in the cloud, and the cloud software is bringing in the data, and the cloud software is transmitting to the broker by way of my laptop to my broker workstation, my platform. And then the orders end up there. I review them, hit a couple buttons. Doesn't take long. That's the whole day. At that point, I am covered for the next 24 hours. There's stop orders on everything.
Definitely automation is something that can save you a lot of time and it's definitely the right way to use it. So good idea there for sure. That's awesome. When did you decide to get licensed to trade and like manage other people's money? Was it a decision, or did you have to think about it a lot to kind of start to manage funds for other people? Or was it a pretty straightforward thing?
It was sort of a weird evolution. Here I am with a successful chemical engineering career, designing chemical plants and doing things. And on a part-time basis, I realized that the engineering profession, especially in the United States in the 70s, 60s, were full of ups and downs. So, economic boom, you hire a bunch of engineers. Economic recession, you fire them or you lay everybody off. And so I thought, I'm making pretty good money. I'm a single guy. I'm putting away a good chunk of my salary and building up a portfolio. And I'm enjoying starting to learn about stocks at the early stages. I'm sitting at lunch and talking to other engineers about stocks and the types of newsletters they subscribe to and which ones I subscribe to. And we're exchanging information, having debates. It's a lot of fun. It's an early version of Twitter, supposedly, sort of, except around the lunch table. And so one thing leads to another, and we end up with an investment club. And then, because most people are lazy, another fellow and myself in the investment club did 100% of all the work. So it finally just became sort of this investment partnership. It was no longer an investment club where everybody contributed, because nobody was contributing except for the two of us. So we went ahead and started managing it. And then we ran into a third guy that was also at our chemical firm, who was also a chemical engineer like we were. And he had even more money under management that he was managing at night from his house, and just as individual accounts. And so we just had a lunch and started talking about how about if we pool our resources and the capital we have under management and kind of formalize this thing a little bit more. So we did. And that lasted for a very little bit. And then we started bumping up against legal limits on what you're supposed to do to get registered. So we all took our exams and ended up with a corporation and ended up registering and becoming registered investment advisors. So it sort of defaulted. And even then, even when we were registered, we were still working part-time and enjoying our career. And then one thing led to another, and our track record got very good. We ended up with several takeover candidates as stocks because we were screening high growth value at the same time. It was very strange technique and kind of lower price stocks generally. And we ended up with some, 100% gainers, and it really pumped up our track record, which attracted even more attention back in those days. So then we ended up with more money coming in. And then I started looking at the whole thing, and I said, guys, you guys both have wives and kids. I'm single. I could actually leave the mothership and go off and open an office and buy a computer and get this thing off the ground. And when we get enough money under management, you guys can leave, join me, and we'll go full time in this thing. And I didn't even have to take a cut in pay. I walked out the door and I paid myself exactly to the penny, the same amount I was making and the same benefits package roughly, and never looked back.
I feel like a lot of people would want to quit their job much faster when they see they can make money trading just because it's exciting or they want to focus on that only. You actually wanted to kind of wait until you were in a good stage with that trading. Was probably a good decision, a good move. But I definitely see people who want to do it faster and quicker.
I think a lot of people want to do it like tomorrow. They have this vision of they've got $5,000 in their portfolio and they're going to make so much trading that they can quit their job and just do it full time. And that's so unrealistic. And again, I'm a businessman who trades. So to me, when I was out there going full time, it wasn't like I was sitting there trading all day. I was doing the once a day type things that I do now. And the rest of the day, I'm programming to make the company, go more efficiently. I'm doing marketing trips to try to support marketing to new clients, bringing in more assets under management. I am getting furniture for the office, finding a secretary and interviewing secretaries to try to get that all staffed up. So I'm really just doing business-like things. And then once a day for whatever, an hour or whatever, I'm making sure all the orders are in on the accounts and making sure everything's the way it should be. So it wasn't the picture that I think a lot of people have of the stereotypical trader that is completely stressed out and a chain smoker and heads for the martini right after work because his nerves are completely shot, and he lasts 10 years and burns out and becomes an alcoholic. That's the stereotypical trader. I couldn't be farther from to me, it's just not that difficult of a profession. You've got data coming in, you got to process it, you got to make decisions, you got to get those orders into the broker, and then they sit there and the market does what it does, and the next day you do it again. That's about how it's like breathing or something. It's not you breathe in, you breathe out, and you breathe in again. I guess that's how Jack named me Mr. Serenity. That's kind of my attitude towards trading. It's pretty easy. I think people make it a lot more difficult, stressful than they need to.
Yeah, we'll definitely come back to that later, the Jack Schwager thing in the Market Wizards book for sure. I definitely want to talk about this more a little bit later. So tell me about your mindset going from a full-time job to sort of full-time trading. If you're not trading like all day necessarily, like you said, but did you feel more pressure not to perform in trading when you quit your job, or was it just kind of like the same thing? And
actually felt more pressure. The trading was easy. The hard part was raising assets when you only got like 6 million under management. You got a good track record, but it's not really, really super long. So I guess the pressure was on me to raise those assets so that we were up at maybe 17 million. I think we finally got everybody out of the chemical engineering job and into the money management company full time. And I think that was more pressure than the trading, actually. The trading was super systematized. It wasn't as automated then, but there were spreadsheets and there was things that we had that made the process very easy. And we still, even though my two partners were still working full time as chemical engineers of sorts, they still shared some of the duty doing screens and figuring out lists for me, and then they'd ship them over to me and I could execute them.
For a lot of people, 17 million is a lot of money. So how did you kind of get that money? Was it just meeting with investors, kind of trying to find the right people to invest in your fund, or how did that go?
It wasn't a fund. That was the problem, I think. We had individual accounts. So we worked with brokers, financial planners, and we tried to organize the heck out of all the data so that we could come up with a concept of we're going to buy XYZ, and this is what every account needs to have in it. So we could execute sort of a block of shares and know how it was going to split down. And it took a lot of organizing, but we made it work for a long while. I think my knowledge now of where the industry's gone has now expanded to the point where, where I'm the chairman of Standpoint Funds Management, and they've got a fund called BLNDX, which is the Standpoint Multi-Asset Fund. And if you look at what that has, instead of having individual accounts with all the logistical data nightmare of keeping track of all these positions at different places, and you get 200 accounts, you've got a lot of data to deal with. Instead, a mutual fund has the shareholder record keeping services. In that case, Ultimus actually custodies the Blendex fund. So they do all that accounting work, and all Eric Crittenton has to do, as the chief investment officer, is just run the investment strategy for one account. Makes it super simple, less stressful, less data strain on the systems and on the computers, and it makes it a lot easier. And it's actually easier for the client as well, because with an individual account, the client gets to see all the detail every day, 24 hours a day, if they want to dial in on a computer these days. In the case of the fund, they get to see the NAV every day, so they can see whether the fund went up or down. But they don't have to see that Eric decided to sell off 1/10 of his position in crude oil, or to adjust the size of his Pacific Rim ETF that he's holding. All that detail just brings more stress to the client. Eric is not stressed at all. He's following a strategy. He knows exactly what he's supposed to be doing. And so everybody's happy. And that's a great place to be, because the money management industry is largely a psychological battle between the client, who doesn't know what they're doing generally in terms of dealing with the trading psyche and the drawdowns and the volatility and all those things. They get stressed out over that. The trader theoretically should be the professional and be able to withstand that, but they got to not only withstand the pressure on themselves, but they have to withstand the pressure that the client then puts on them. And that's why, I mean, for me, being retired now, all I have to deal with myself. I don't have to deal with all 200 clients wanting to phone call me and complain that we're in a 5% drawdown or something, and wondering why and when is it going to turn around and all that good stuff. It serves no purpose, and I try not to let it get to me in terms of pressure. I still did the same thing over and over again, but I think a lot of managers feel that pressure, especially when they're running a much more leveraged, very volatile type of strategy. Then the pressure can come quick and hard, and not only that, the redemptions can come quick and hard. You're down 30%, and all of a sudden 25% of your book is gone, and they redeem the money, and then you're managing less money. So you got to deal with that. You got to figure out whether you got to lay off employees, all those issues. So, the money management, I don't miss the money management industry at all. I put a smile on my face in 2003. It's been there ever since. And I really enjoy the challenge of expanding what I'm doing for myself and automating it and getting it. I was running about a little over an hour a day here just 6 months ago, and I've got it down to probably 40 minutes, and I'm hoping to get it down to 15 minutes with that seventh strategy that's coming on board. So I'm getting there.
How much work went into getting the capital for the accounts, or actually convincing people to kind of go with you and invest with you? Is it more like a relationship thing, or is it you have to do a lot of convincing there? Or is it pretty easy to kind of get capital once you get running and people see that you have a good performance?
I think all of the above, maybe. There are some that I had really strong relationships where they almost became best friends. There's others that are highly into the number crunching. So they're analyzing your track record 50 different ways and asking you statistical questions, if they're from a family office or if they're from a technical background like engineer, accountant, that type of thing. actuaries. I had some actuaries as clients. They're interesting. And then others are just, you got a good track record, you made some money, and you seem like a smart engineer, so I'm going to give you a try. There's a combination of a lot of different personalities involved in a clientele, but usually it still requires going and meeting them at least once, or having a conversation on the phone at least. And so I was the bottleneck in the early going, because there was just one of me, and I was the only one full time that could go out and, meet with people. And I didn't really, I was more of an introvert, still am kind of. If I have the chance to sit here at the computer all day, I'm totally happy. I don't need to do interviews. I don't need to, give speeches. It seems like a lot of people want me to, so I'm happy to do it. And I think I know what I'm talking about, so it's no big deal. But I could be here by myself and be totally happy in life. So I a little bit am the introvert, and just love the peace and quiet, and let myself challenge myself. I don't need clients or brokers or anybody else to challenge me. I can challenge myself to be better and better at what I do.
Interesting. And I think it's the same thing for a lot of traders. A lot of traders much rather stay at home or be on the computer, kind of work on their craft, than kind of being in the public. Most of the time, of course. Not everyone, but I'm guessing a lot of people are that way.
Yeah, it's a great profession for an introvert, because you don't have to deal with too many people, and you pretty much are dealing with yourself. So isn't that sort of introverted?
I'm wondering, so, or when you had the funds, when you were licensed to trade and you had people around you kind of supporting your trading, and had like a entourage of some people to kind of help you or kind of keep you accountable to this, was it different when you moved to then trading on your own? Was it a different thing, or did you kind of just had the habits built in, so you didn't really have any trouble with kind of trading by yourself?
Yeah, there was a transition, but the transition was not what you might think it was. First of all, what I did with Trendstat back in the day was designed to achieve what we needed to achieve for clients. So it didn't matter at all what Tom Basso thought of, trading gold. I've got strategies that are designed to create returns that are in risk levels that I think clients, in my estimation, can tolerate. And they'll be happy with the returns, or at least accept them for what they are. They'd always like more, but they wouldn't fire you. At the same time, you keep the risk down and make sure that they don't fire you for bad performance. So that was all designed for clients. Now I go into retirement. Now it's just me. I'm the client. I've got a different risk tolerance. I've got a different tolerance to volatility. I'm a seasoned veteran at that point of 28 years in the business, and another maybe 10 of trading, all the way back to when I was a paper boy. So now I'm 51 years old. I've got a very nicely sized portfolio. I'm not going to be capital starved. And I do have some computer expertise, but all of the computerization that Trendstat had, I retired with Trendstat, because it was a legacy software. It was written largely in Fox Pro, and Microsoft was going to just eliminate Fox Pro from the realms of existence. They wanted everybody to go to Visual Basic, or you could go on to C# or those types of languages. And I just didn't feel like, from a company standpoint, I wanted to invest another. I had already spent probably close to $1 million building all the software that we were running on, and I just didn't want to invest what appeared to me to be another $250,000 to $300,000 to bring it up to the same thing I've got now, but running in a different language. It just seemed like a big waste of time, and I didn't really feel like, I had already achieved kind of the challenge of being a money manager, and I had enough money to retire. I didn't need the job. I thought, okay, shut it down. So I didn't have any automation when I started. So the first thing I did was, and I recommend every trader does this from time to time, is take an inventory of your situation and yourself. In other words, how much money are you going to trade? What are your skills? List them down, write them down. All right, I can program. I can do spreadsheets. I can do whatever. Who do you know? That's another interesting thing. A lot of people know me, so I could be a resource. Or you might have an uncle that spent a whole lifetime trading. You could talk to your uncle. What types of time do you have to develop a strategy that you can run? And how much time do you have each period, whether it be intraday? How much time do you have intraday? How much time do you have daily? How much time do you have weekly to be able to maintain and process the actual trading that you want to do? So you set sort of it's sort of like writing a business plan, and you're putting down your objectives, your risk tolerances, your capital, how many people, what kind of machines do you need to do what you want to do, just like you'd be starting a business. So I did that going into retirement, and I simplified drastically everything I was doing because I didn't have the automation behind me, and I wanted to keep my time commitments down. And I wasn't trading 600 million anymore. I was trading, a lot less than that. Even though it was a good size, it was, far less. So I then designed what I needed to do, and I set out trying to automate pieces of it. So there were some spreadsheets built, and I went ahead and got into actually trading again, and buying and selling and following the strategies. And since that, for the last, I guess, it's almost 20 years now in retirement, I've done nothing but continue to add more automation. And, the last 3 years building the simulation and trading platform, or consulting on it. Somebody else is doing the heavy lifting. I'm not doing the programming on this one. It appears to me I'm going to be able to get my whole 7 strategies that take a lot of time down to 15 minutes or less. And if I trust the software enough, right now we don't trust the software. That's why it's not out there in the real world yet. I'm alpha testing it, but I'm looking over its shoulder at everything it does to try to find errors. And I have found errors. So we've tried to figure out, okay, why is this happening? What do we do to patch the software, make it better? And when it's ready, we'll go to beta testing. And after that, we'll go commercial. And it's not going to be my company. I'm just simply providing the consulting. And in return, I'm getting use of the software for free. And so it's really helping me right now. It's my way of giving back to the industry and getting something started that other people can use to help make themselves more efficient. And meanwhile, I'm making myself more efficient. So everybody wins.
I see a lot of traders having issues with the strategy creation, or like you mentioned, the strategy development part of trading, where they feel like you have to get everything perfect from day one and everything like running smooth and getting good results from there and like having profitable like results from here. What do you tell them to kind of focus on to be able to just create a strategy that works, but nothing like perfect from day one necessarily?
True. I've had trading errors. I've had, the trading platform. I is trying to pick up my positions, and for some reason it didn't pick something up, and I'm long and it thinks I'm short. So it puts in a buy order and it's supposed to be a sell order. And, I have to manually catch all those. And we've got it now to the point where I'd say the last, I don't know, at least 5-6 days, it's gone perfectly smoothly, and it's been through some strange markets here in the last few days. So we've got orange juice going, up 7.5% 2 days ago or something like that. Is insanity. And it's been went up yesterday and today too. So it's been a really crazy time in some of the markets, and it's just waltzed straight through it. The data's been good. The automation's worked beautifully. The transmission of orders has worked beautifully. And that's what I like to see when you get stress tested and you make it through with no difficulties. You're getting close to putting the blessing on it and then moving on to the next stage where you can start fleshing it out more and getting beta testing underway. So we're getting there.
I'm guessing these strategies follow mainly the price action and not too much economic data, or are you also kind of following the data more economically on a bigger, like fundamental level for trading?
I believe in trading, for me at least, that if you take my process engineering model of bring the data in, process it, and ship it out, I believe the single piece of data that is most impactful to whether or not you make profits or losses would be the price action. If the price moves in your direction, you make a profit. If it moves against you, you take a loss. And I don't care what the Fed is doing. I don't care what the GDP is doing. I mean, personally speaking, and I look at the economy quite a bit as just a citizen of the world, and I look at what's happening in Europe and what's happening in China and other places, and I try to be well read, and I follow interest rates and all that stuff. From remodeling a house, I'm having to deal with the economic conditions of finding contractors that'll come in and work, and I realize that we're starting to go into some pretty tough economic times. So I'm expecting some very good pricing from my contractors on some of the jobs we're going to do. So this is all affecting my life, but my trading, price comes in as a piece of data. I process it. I try to decide whether the action today is noise or is something I need to take action on, buy or sell. Simple as that. Ship the order out, go away, and come back tomorrow at the same time, do it again.
How do you adapt to different market conditions like we've had in the past few years? We have COVID, we have some wars and different things that probably impact the market in different ways that it was before these things happened. So how do you sort of adapt to these different conditions in the market?
I build indicators that are volatility adjusted. If you look at something, a simple example would be like a Keltner band. If you take a Keltner band, one component of the Keltner band, aside from the moving average that a lot of people use, I use exponentials mostly. It's easier to use a computer and do exponentials. But Keltner is nothing more than an average true range above and below the moving average line. And the top line would be your buy signal. The bottom line would be your sell signal. Everything in between the two lines is noise. Ignore it. If you take that attitude, it becomes very, very mindlessly simple to put a stop order to buy on the top. And if you're in the position, put a stop loss on the bottom line. Good till cancel, move it every day, done. And so the last few years, because you've had increased volatility, in the year 2020 was, I think, the best year percentage-wise that I ever had in my life. I think it was up 103%. I've never been over 100% in my lifetime. And why? Was I somehow all of a sudden smarter than I was the year before, or than I am this year because I'm not up 100% this year? No, it's just that the markets provided you an unbelievable crash. Volatility went sky high, but I was in on the trends. So the trend's going down, I'm short, as I'm short everything. And I'm just cleaning up. And then what did everybody do down around April? Everybody said, oh, this was horrific. The world's going to come to an end. We better make sure it tests the low. So everybody's looking for a test of the low before they can declare it's ready to go back up. Guess what? It didn't test the low. It turned right around, gave me buy signals. I went long, ended up with the rally, ended up making a ton of money to the upside, while everybody else is twiddling their thumbs and kept themselves out of the market because they were waiting for that test. Just let the market tell you what it's doing and just go with it. Don't second guess it. And like right now, I think the market is, the economy, I think economy's looking very shaky in the United States right now. I am not a fan of anything that's being done economically speaking over the last couple of years. Even if you want to go back, really be super critical, I'm not a fan of the last, going back to Reagan in 1980 practically. So I've had a lot of disgust at the way the economy has been managed in the United States, but particularly right now, I think we got some serious problems ahead. And yet I got my signals to go long. I'm long, the hedges are off. I'm long orange juice and long coffee and all these weird things are going crazy, and I'm coining money. I don't consider the economy when it comes to trading. I just look at the prices, and prices are going up, I'm going to be long. Prices going down, I'm going to be short.
And this shows the importance of not listening too much to the news compared to price action. Like you mentioned, people were calling out the crash of the market for a long time. And listening to this as a trader could kind of get you really confused and lost. If you listen at price action or your own kind of style, your own setup, then that makes things a lot easier.
Oh, it's so easy. That's how I can do it so fast. Everybody tries to make, I mean, you look at some of the comments, and if you want to get into, what I call in general terms, there's order in the universe type indicators like Elliott wave and Gann and Fibonacci and all these different things that there's an order to the universe cycles. You're going to have the 200-day cycle and the 10-day cycle or whatever it is. And there's a anticipation or a prediction that that's going to repeat, and therefore you can predict the future. That is introducing tremendous complexity and emotional distress to yourself. If you simply just measure the direction it's going and go with it, when it switches from down to up, go long. If it switches from up to down, go short. I don't know how to make it any simpler than that. Every major move up or down, 100% of the time you'll be in on it, without doubt. The only time that you got problems is when the market goes sideways, because there is no direction. So you take a lot of whipsaw losses, little tiny nicks here and nicks there. And if you have enough of them, you kind of get to bleeding a little bit. But that's your only problem, is the sideways. And I've been trying to invent ways of softening the sideways action so that I have strategies that'll try to produce profit during those periods. That's why I trade 9 strategies, because there's some of them are dedicated to sideways action. A friend of mine, Lawrence Bensdorp, who's in Portugal these days, trades 50 strategies for the same exact reason. He tries to make money no matter what the market does. Because the different strategies, some of his strategies are geared to make money when the market goes up, some for when it goes down, others when it goes sideways, and works for him.
Do you feel there's a sweet spot of how many strategies you should trade? Is it like too many, it's kind of confusing, or too much? Or do you feel like the more the better in that case?
I'm comfortable right now with 9. If I get a little bit more automation, I can think of one other thing I might want to do some research on. But I don't see myself trading 50. I don't think I need it. He seems to like it. That's fine for him. I think every trader's got to find their own way and figure out what feels comfortable. And I think, 10 to 20 at the tops, I think you're kind of reaching the point of diminishing returns. So you're spending time and effort trying to create one more strategy, but you're diluting it so much that it's just very hard to produce huge profits, because you're trying to stay very stable. You're making it here, you're losing it there, and you're hoping that the gainer is a little bit more than the loser is, and so you're inching along little by little. That's a nice way to run a portfolio if you can get to it. And I'd love to have enough strategies to where I could make money every day of the year without ever having a drawdown. Wouldn't that be nice? But it's a brain tease for me to try to get closer to it. And I haven't gotten there yet, but I keep trying.
Interesting. Is there anything we didn't kind of touch on or talk about you would like to mention, or sort of like a message you want to give to traders listening to this?
Just enjoy the ride. ETR right here on my shirt. I think so many traders don't realize they view themselves as traders, first of all. You shouldn't think of yourself as a trader. You should think of yourself as a human being that might be a husband, might be a father, might be a friend to somebody, might be a son to somebody. You fill a lot of roles in life. And to me, trying to become obsessed with trading to the point where you view yourself as a trader and that everything else is ancillary and takes second priority, I think is a mistake. You miss out on how wonderful life is. And so philosophically speaking, the enjoy the ride comes out of a lot of things in life and in trading, that you're going to have good periods in the markets, and the markets are going to have the wind at your back, and you're going to coin some very nice cash, and you're going to have some drawdowns along the way. That's kind of part of trading too. And really along the way, you got to take it as a challenge to try to control your risk better and exploit your profit better and follow your strategy better and deal with your mental side better. And a lot of that just goes with stepping back from it all and not looking at yourself as a trader, but looking at yourself as someone who trades, but also is a father and is a son and a husband or whatever, or in the case of a lady, a wife. perhaps, or a daughter. Trying to tie yourself up mentally in just being a trader, I think limits your ability to be able to see a little bit outside looking in on your trading and be able to be more neutral and observant about how it all works and what can you do to make it easier and with simpler and less errors and more automated or whatever. By being so, I wake up in the morning, grab my cups of caffeine, and then I just sit here in front of the computer and, gnash my teeth all day with the stress and everything. That's not a recipe for success long term. You're going to burn yourself out. So I guess the enjoy the ride moniker that I said in a post many years ago that is now kind of stuck with me. I have a lot of people using the term in their tweets now. So I've kind of created a new phrase, I guess, for the industry, but it kind of reminds you to just be a little more patient with yourself and see the bigger picture. And that's probably what I would leave people with and get them thinking about beyond just trying to be a trader.
Love that advice for sure. I think that's definitely good advice. I totally agree with that. Why can people find you if they want to connect with you after the podcast? Where can they see your work and connect with you and learn more from you?
Well, one of the places that's easy is enjoytheride.world. It's a website, .world instead of .com. I've got clients and friends and people all over the world, so it seemed logical, and .com was taken anyway. So enjoytheride.world. There's lots of free or inexpensive resources there for traders, interviews that I've done. If you want, I will put this interview on that website and you get more traffic to your place. But I try to spread the information as much as I can. A lot of people love my interviews, but books are on there. A lot of other recommended books that I did not write are on there that I would recommend potentially for traders. Things like I've got some videos, I've got some recorded webinars that people can buy for very little money. The position sizing book is on there for a whopping $10. Just about everybody can afford that. And so I tried to put as much resources in one place as possible. You can also see me on Twitter. It's at Basso_Tom. Anything else is an imposter. I've had about a dozen of them that I've tried to shut down. So be very careful. If Tom Basso is chatting with you and asking for money, that would not be me. It would be an imposter trying to scam you. You've got, I'm on Facebook under Tom Basso or Enjoy the Ride, I think it is, .world. And I'm on LinkedIn, I'm on MeWe, I'm on Parler, I'm on Gitter, I'm on Telegram. So there's lots of different ways that people can find me.
Awesome. We'll try to put the link below the description here of the video or the podcast notes. People can click it and check it out directly and go see your site. I was going through the list of books you have just before we started the interview here, and you have a lot of books there. Definitely a lot of people can learn from some of your books, which are definitely really good. Some of the books that also mention you, which is definitely good. And hopefully next time we can talk about also the Market Wizard thing. That could be a good discussion to have, even if you've seen that book as well this year, the new Market Wizards. So definitely something we can talk about next time and definitely go through. But definitely a lot of good stuff there.
Super.
Awesome, Tom. I appreciate your advice here you give to my listeners, and I hope people will like this. I'm sure they will like it. I hope they connect with you and go see your work. You do a lot of stuff here for helping traders, and that's really good. And hopefully you can catch up pretty soon, discuss more stuff, and go more in depth on those.
Great. Look forward to it.